Well, look, the key issue I think that's impacting insurance companies right across the region is that more and more tax directors are being asked to do more with less resources. And, this is being driven from a number of aspects. We've got environmental change that takes the form of legislative change across the region, and much of this is in response to global regulatory change that is on the table. We see local regulatory change taking place as well. But we're also seeing other sort of regulatory changes, so non-tax related changes that have flow-on tax impacts associated with them. And insurers are grappling with these types of issues. I think the other environmental factor that drives insurance companies to have to do more with less are changing stakeholder expectations. And we see this not only in the space of the expectations of revenue authorities, which is quite clear and has happened for quite some time, but we also see it in respect of customer expectations. There's an increasing expectation of customers that insurers across the region are paying the right amount of tax, and in fact are not just paying the right amount, but are seen to be paying their fair share of tax across the region. So this increase around transparency, the increase around legislative change really takes up a lot of time of tax directors. The other issue I think that we're seeing across the region is an increasing focus on data. And so often now we're seeing revenue authorities asking for the data of the organisation, where historically they would really ask for certain pieces of information and then they would compile that and come back with a view. Now we're seeing them say, look, just give us all your data. We'll go and find the needle in the haystack, rather than you actually identify the needle. So the real challenge for insurance companies is ensuring that at the end of the day, they know as much about their data or more than the revenue authorities are going to know. And that's a real challenge. I think insurance companies should respond to the changes by understanding what they want their tax function to look like now and into the future, whether that be 12, 24, 36 months down the track. Once we understand what the tax function ought to look like, in the context of all the environmental changes that I've spoken about, it's necessary to understand how that's going to be built. Now, part of building this is going to be taking into account automation. How do we automate processes and move some of the tax processes closer to the underlying source data, the transaction data? The other thing is, how do we use analytics within the tax function to ensure that we're getting the right outcomes, and that not only are we testing a certain amount of data, but we're testing all the data associated with the use of analytics. Talent is another very important area. It's a matter of understanding what is the talent needs of the business going forward from a tax perspective. Not always is it going to be the same talent needs that we've had in the past. With changes around customer expectations and the focus around transparency, there may well be different talent that's required across the organisation. And finally, there needs to be a decision made around the question of, are others more capable than ourselves to actually be doing the certain aspects associated with the tax work? Does it make sense to outsource certain functions? If they're low-value functions that are being done internally and tying up a lot of resources, is there a better way to start thinking about how those activities get done within the organisation? As I said before, it is a journey. And it's a journey, though, that we're all on. And at the end of the day, the right tax function will be the function that goes on this journey, understands where they want to get to, and puts a plan in place to deal with it.